Hey, what's up everybody? Game Wasabi here for another video. We're going to try to pick apart these waves, and I had some time to think over the past 24 hours and take some measurements and stuff. And I'm kind of comparing these waves with the current waves. The timing is not quite there. It wouldn't be there until, say, October. But the measurements are pretty good. And if I am to say that those are matching legs, I don't really want to see any daily closures below 53.8. We could have wicks down there, totally fine, but I don't want to see my dailies close below that. While I am kind of still expecting lower, very little bit lower, I expect it to be wicking reabsorption, if you will, if price does decide to even go lower. We'll get into the smaller time frames a little bit later. But yeah, that's my invalidation, is daily closures below 53.8 I would not like to see, but certainly not down to 49.436. Daily closure down there would tell me that those legs do not match, and I would not like them. Now, if we are to match those legs, what I would like to see with price action, let me take a screenshot so I can draw on this. So it basically just has ABC pattern and ABC pattern. They sort of match, but they're not matching in time. This one still took a couple more days than we have here. This would have to bleed off into like August time frame, early August, for them to match in time. But what I would like to see coming out of here is this leg right here, and then chopping sideways right there. If we can do that from our current position and chop sideways, that opens up a large spike up, potentially a large spike up into a retest. I think I went too far up with that spike up. I would only expect 93,000 on a spike up, and then a heavy retrace back to the all-time highs, similar to the way the price action was down here, how it broke and retest and then resumption, and that would give you excellent symmetry on these legs. You popped up, back test, and then push up for another leg. Target for that leg would be 106 to 120, something like that, 124, somewhere in that pocket. And that would give you a 1, 2, 3, 4, 5 with not really much of an extension. Nothing really got parabolic. So that would be a very muted Elliott wave, just a run-of-the-mill, nothing exciting there. I mean, its price definitely still went up almost 10x from the bottom if it does make it up there, roughly 8x or something like that. So very substantial returns, but not in crypto terms. If you were to get something a little more hectic, you would get some kind of relationship between these waves. So if I take this first leg up and measure where the projection went, we did not hit the 1618, but we hit the 1.5, which is not a fib target. It's just a measurement that I noticed. So we hit the 1.5. So if we experience the same relationship from our last leg up and project to the 1.5, we could have a higher target. And it really depends on how the wave comes out of here. If the wave comes out like I suggested before, how it pops up to 90, pulls back, and then pushes up one more time, I would suggest that's done. If we go even more bullish, though, and we have the relationship repeat, we have a target of 282, which would be that would be pretty nice. Don't know if we have the time to do it, but yeah, we'll see. If there's enough demand and the supply runs out, you can get up to those targets fairly easily, fairly quickly. The timing for that, if you take the timing relationship, this first leg up was 144 days, which is a Gann number, 144, fairly important number. This leg up was 184, 183, something like that. So it took a little bit longer, so maybe this one takes a little bit longer, goes to 200 to 220 days or something like that. That would get you into early 2025 for that leg. I'm kind of expecting sooner, being left translated cycle, but it certainly doesn't have to. We will see what the market gives. We certainly need to see higher highs and higher lows if we want to trend up. And currently, we don't have that yet. Daily is still very much going down. Got a lower low close 2 days ago. This leg didn't do anything, and now our current daily is trying to push up. So we do want to see it close higher. We do have a fair value gap right there. The sell would be at 59.3, which invalidates my previous sell setup that I had in yesterday's video, even though that one was playing pretty nicely. If you're tracking the leg there, I was matching this leg. We technically just played that one out, and now maybe hit the bottom again sometime Tuesday, Wednesday, maybe even Thursday, whatever day CPI comes out. If we push the lows into that, pop back up, break out for CPI, that would be ideal. That would be excellent. But yeah, nothing exciting happening just yet. We're still closing lower lows, lower highs. If we can close up here, that would be a higher high close, buy the higher low, and we might be able to grind into some positions as this breaks out, comes up here and plays for a week or so before a major run. Alright, zooming into the 4-hour chart. Let's see if I could readjust this box. This is where I wanted it. You can see this was support, broke through support, and now flipped resistance. And that was the sell, and still meandering below it, but it looks like it's getting absorbed. It doesn't look too bad. Up, 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 up. Ooh, if we get an ABC up here, this might be complete. Just saw something as I'm doing this video. I'm going to bring your attention to the top here. This popped up, popped all the way back down to the low, and popped back up again. Or popped down, whatever. But if we were to come out of this correction the same way we went into it, this would be popping up, back testing, and then small. There's your buy set up right there. Invalidation for that would be break longer than that, or you'd have to break below again. So that could be your buy setup before this thing decides to repeat that leg and grab all the liquidity. That would be cool if that's how this is going to play. If this leg plays up here, then that leg plays down, find support right there, pops up, and this weird little correction there, pops up, has a correction there, boom, boom. Then we'd have some targets to start pushing. That would look really good. Let's see if we get it. If we break back inside of this consolidation box, though, that when you look in terms of Wyckoff, that is breaking back into a consolidation. And generally, you don't break back into a consolidation unless if you're going to grab this liquidity up top eventually, or break much beyond it. And that would tell you that this is a reaccumulation. That would confirm it. And you may have an upthrust, grab this liquidity. After that, you might flush down, and then you just look for your buy setups and invalidations from there. You have to think the market being short, anybody who's short in the market, they have where they place their stop losses. There's stop losses here, 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 and at all-time highs. Currently have stop losses here. I'm sure you have stop losses all through here as well. Currently stop losses there. So those get pushed. Target the next ones. Target the next ones, and you might just make it all the way up there before flushing down for a retest and go. So somebody did have a question. How do I locate liquidity on the chart? You have pockets of liquidity, and liquidity is generated by the market makers. Where do they generate liquidity? They just give you relatively equal lows, equal highs, equal lows, and of course anywhere where there's going to be stop losses. The market will target those stop losses. So like this, that generates liquidity to be able to flush that because of all the stop losses that get hit there. And you have stop losses that go along that supply line. Supply line gets broken. Then you take out those liquidities. I'm really surprised that we did not get higher and take out those liquidities on this push. So the market maker wanted to save those for later. He has a reason for it. Same thing with this push here. This did get taken on the CME chart, on the futures exchange, but it did not on the exchanges like Coinbase, or I think Bitstamp did not take it either. So you did not take the stop losses there. Now you've got this supply line. That was a way to take liquidity, fake the breakout, and flush down. The market maker is using your stop losses to move prices where he needs it. So there was stop losses there, as was mine, because I was anticipating this to be my liquidity to then break out. And it gave me the breakout and flushed me back down and stopped me out. So I entered short. So we're below the range. That's a sell setup until it's not. So stop me out. I'm happy to buy. Where else would we find liquidity? I found this to be liquidity because they did not take the liquidity before going up, which made me interested in this area. If you look at how they left the liquidity there, moved back up, or moved up. So when they come down, they want to take that liquidity. Now there's plenty of liquidity at a break of the trend line. And like I said, all those stop losses that are all the way up. Stop loss, stop loss, stop loss, stop loss, stop loss, stop loss. So hopefully that helps. Let's zoom into our current area. So more locally here at the 54,000 range, you can see we basically have some kind of accumulation range here. At least that's the way I'm kind of looking at it. Based on the volume signature, you would have a preliminary support here. You have your selling climax, automatic reaction, secondary test. So they're just testing liquidity. So you might get another test. You might get an upthrust of the range to grab that liquidity and flush it down for a spring. And then pop back into the range. And there's your buy. Targeting at least up there. Back test. Show of strength. And then this is the backup phase. And then you can enter markup phase for this particular time frame, which is more like a 1 hour chart than a 4 hour chart. But that should push you up to upper liquidities, which there is a weekly sell order block at 67.7 to be aware of. So maybe price makes it up to there and comes back down. So the weekly order block is right here. We zoom into that. I didn't quite get the sell setup that I wanted. It was at 67, well, 67.7. So missed it by like $600. So I did not enter that sell. But you might have some supply come in there, or take a Fibonacci retracement. I mean, whether or not you're bullish or bearish, you got to be aware that supply is going to come in somewhere around that 618, 64 to 65,000. Happens to be a fair value gap here on the weekly. For those that know, you can see it pretty easily. Candle low to candle high. There is a nice fair value gap right there. So that should be filled. And it's also a sell setup. So you should see some supply come in there. What else do I got? Speaking of supply coming in at the 618, you also have to be aware of where demand will come in. So you take a fib retracement from the low to the high, and look where supply is coming in, 50% retrace. You might get down to a 618. This is in log scale, so in linear scale, 618 would be 52.2. That would be, look at that, a little weekly candle right there, a little retest where that candle broke out. Well, let's check the bearish retracement in linear scale, see if it lines up with that fair value gap from this high to this low. Oh, look at that. Top of the fair value gap, 64,917. That would be a take profit. Don't have to take it all, just take some. Pay yourself for your time if you do find a buy setup down here, or if you have bought already and have a stop loss in place. Risk managed. This is a target. Supply is likely to come in there. You should have some pushback. Likely to have another buy set up at the bottom of the box. Target higher liquidity. We'll see what the market gives. I think that's about it. This is kind of a long video. Hope it wasn't too long, guys. Let me know. Let me know what you think. Let me know if there's any other questions that I could potentially help you with. Like Camel Finance says, cycle low is in focus here. We might be getting a weekly and daily cycle low here. So could be very important for the next 60-day cycle and the next weekly cycle, which is 20 weeks or so. So, cheers.